Hi guys, hi, welcome to Traders Talk, and this is your host Meng Hon, and it's great to see you guys again on a Tuesday evening, right? We'll catch up this week again on the market. Let's see what has happened in the market for the last week, and this show basically we will cover a bit more on the market happenings, and then also some trainings about trading the stock market, and also using options as a trading tool. Yeah, so this is our focus, and we hope that you will be able to actually get some benefit out of this show, and we will start. Okay, yeah, and there's no change in the market since we have been together for the past many months this year. And of course, if you guys have been following the market, it is really painful. It's really painful, whether you are a trader or whether you are an investor. Of course, the market has been going down since early of the year, and of course, the S&P 500 has actually gone down by about 17% to date. 17% to date, and of course, the Nasdaq market, which many big name and the tech stocks are in, it has even dropped more. Yeah, it has even dropped more. To date, basically, it is over 20%, 27%, 24 or 27%, if not wrong. Yeah. So of course, the Nasdaq has actually gone into so-called bear territory, and of course, this is also mainly driven by the high inflation, and of course, because of the high inflation, the uh, the uh, the U.S. Federal Reserve has started to actually raise interest rate effective in March this year. And of course, to date, basically, they have actually increased the rates by 75 basis point, 0.75%. Yeah. And of course, this will actually continue in the following months, all the way up to the year end. I think there's another probably five rate hikes, five plus 5 or 6 rate hikes. And basically, this has how to say, this has actually caused the market to actually come down, and valuations to actually also come down for many of the tech stocks. Yeah. So for those who have just joined us, welcome, and it will be great if you guys give me a thumbs up, if you can actually hear me, and of course, if you can like and share the show, then of course it will be even better for me, so that I will give more value to more people, and that would be very much appreciated from you guys. Yeah. And of course, if there are any questions, don't be shy. Just put it up on the comment box. So that uh, I can actually answer any of your questions or concerns about the market, or even if you have questions about trading strategies on options and stocks. Yeah, please by all means post it on the comments, so that we can also address it, and also share it with the rest of the viewers. Yeah. Okay, let's put up the what is that, the charts. Yeah, we'll go through the charts on the S&P 500. S&P 500, right? Okay, this is the S&P 500. Yeah. Okay. So of course, as I said earlier, the S&P 500 has actually gone down by about 17% from the all-time high, somewhere reaching early of the year. It's dropped by 17%. There's some echo here. It's dropped by 17%, and of course, we hope that this how to say, this drop would actually start to recover post the second Fed rate hike, which happened last week, right? But of course, it did not. It did not happen. Of course, it did not happen. In fact, it actually went down further. Yeah, it only went how to say, went up for a day actually. A day. Yeah, you remember in our last traders talk, we were talking about the Fed rate hike, and of course the days before the Fed rate hike, the market has actually came down, and the VIX was actually spiking to above 35. And what we actually said that, of course, when VIX and the volatility is actually high and it is actually above 35, right, then that means there is actually a lot of fear in the market. And of course, this kind of fear does not last long. And in fact, it did not last long. The following day itself, we also had some a short rally. I think this was 3 days. 3 days. We actually had a rally of about 6% up from the lows. We had a rally up of about 6%. But of course, what happened after that is that the 30-year bond rate has actually increased to about above 3.14 or 15%, right? And of course, that has actually again spooked the market. And the market nowadays are actually very sensitive. And what happened is that any negative news, they would actually have they can actually have a very fast sell off. And of course, when that actually happened, right, the market has actually dropped 3 consecutive days, and this was actually around 7.5% drop, 7.5% drop from the earlier highs post FOMC rate hike. Yeah, so go up 6%, come down 7%. So as I said earlier, right? As I said earlier, in the times where market is actually volatile, right? When the market is actually volatile, right? I think there's an echo. Let me check this. Speakers. Okay. There's no echo. Okay. So when the market is actually volatile, right? How to say, when the market is actually volatile, for traders, right? For traders, we could not actually hold on very long positions. I mean, when I say long positions, right? Nowadays, anything beyond 2 days is long. Anything beyond 2 days is long. Sometimes anything beyond 2 hours can also be long, you see, because like I said, the market is very sensitive to news, and once negative news comes out, then of course it will be published throughout all newswire, and of course the players, whether it's institutional or also retail, once they read it, they would actually want to play safe, and they would actually just cut position, sell or whatever, because they're scared that the market will actually drop. Yeah, and once this happens, right, then of course it's actually going to be a spiral effect. What I mean in spiral effect is that if one person sell, 2% sell, 100% sell, 1,000 people sell, and 10,000 people sell all at the same time, right? This is going to be a spiral effect, and that's why you can actually see certain stocks, right, would start to actually how to say, have this limit sell down, or they stop short selling in certain stocks, because it has actually gone down below the so-called daily reduction threshold, and some might be halted for some minutes before they allow trading again, you see. So this can actually happen. And of course, with nowadays with algorithm trading, the computers itself would also trigger all these kind of events. Yep. So if you are in positions, then longer than 1 day, of course, what we advise early on, and always advise you, is that take profits. If you are in profit, take profit quickly. And of course, there is very difficult. It's very difficult for you to actually hold so-called long positions, especially nowadays, long positions more than 1 day. Of course, how to say, if you are even longer positions, like for example, if you are doing long dated options, right, 1 year or 2 year, then of course that is going to be also very painful, because if imagine if you are holding say any stock, say Google, for example. Yeah, I mean, if you're holding Google and you took a long-term position, say somewhere in January here, and thinking that this is actually a good price, 2005, right? And then now it is actually at 2,250. Yeah. So of course, although the how to say, although the decay is actually slow, right? Then, but of course, that would also eat into some of the so-called options value. Yeah, and that is how to say, very normal during this kind of period. Yeah. So okay, so SPX, right? And of course, what happened in SPX is it actually went down below 4,000 points. Yeah, it went down below 4,000 points. For the first time since when? Let's check out here. Let's pick this. Let's take this away. Okay, it went down below 4,000 points, right? Yesterday, right? Yesterday was the first time it went down below 4,000 points. And the last time we actually reached uh, below 4,000, right? Was actually sometime in April 21. In April 21. So basically, it's like a year ago. I mean, basically, we the market has actually went back in time to a price where it was actually a year ago. So this is, but however, this is only a 17% drop from the current year. Yeah, and of course, this price was reached 1 year ago. Of course, there are many other stocks which has actually gone down more than the market, in general. Basically, you're talking about between at least in the minimum 20%. However, good stocks in, say, in Nasdaq or in S&P, right? A lot of stocks has actually, the better ones probably gone down by 20%. Yeah, besides energy stocks. Yeah, besides energy stocks, the other stocks has actually gone down between 20 to 30%. I mean, even if you talk about strong stocks like Microsoft, has also gone down by how much? I think it's about 25 at least. Yeah, 25%. 25% from the high. This was actually in November. Yeah. I mean, Apple has also gone down, Google, and a lot of actually gone down. So the thing right now, of course, the rally which we expected did not come. How to say? It came, it went away. It came, it went away. And of course, possibly is that it might also come back. It might also come back. But of course, whether it is actually going to hold up or not, I mean, it is actually difficult to say. If a rally comes, whether it's actually going to continue to hold, is very difficult to actually say. Yeah. Short term, probably a short rally for a week or two. If it is good, that is already good enough. Like what we had in March, right? This is March, right? Yeah, in March, basically we had something like a 2 weeks rally, which basically gave us about 11%. How to say, 11% increase in the S&P in 2 weeks. But of course, nowadays we see we can actually reach this in 2 days. Yeah, like what happened last week. Last week we were actually up about 6% only in 3 days. Yeah. But of course, the other side can also actually happen. So right now, I would say S&P, we would be actually so-called trading within a low of about 3,000. I would say 3,000. Now it's 3,991, right? Yeah. So is about here. I would say between a range of between 3,850 and a high probably up to 4,200. Yeah. So basically, this is actually the range which we actually expect it to trade between now and also next week. Yeah. I mean, although you actually see big, I mean, technically it is not big because of the huge volatility in the market. And of course, if you look at VIX yesterday itself, it has also spiked up to above 35. Just briefly above 35. Just briefly above 35. And of course, today itself, the futures market has actually went up on opening itself. And of course, where is it right now? S&P is actually about 28 or 30 points up. And then Nasdaq is currently about 130 or 140 points up. But of course, earlier part of the day, I think in the afternoon, right, Nasdaq has actually gone all the way above plus 200 points. Nasdaq futures has actually gone all the way plus 200 points, and only in the last 1 hour plus or so, it has actually given up about 70 to 80 points. Given up in the last 1 hour, 70 to 80 points. You see, the market is extremely volatile, where plus minus 100 for Nasdaq is basically done in minutes. In minutes, is it? Yeah. Okay, but hopefully, when the market actually opens, we can actually get some how to say, some recovery in the market today. Yeah. Long-term interest rate, I think it has actually came down slightly earlier today. Yeah, and probably because of that, the market is actually taking some relief. So if there is actually a relief rally today, and like I said, if you are in any positions, if you are in profit, take it first, and let's see how the market reacts in the following day. Yeah. So VIX has actually 35. Now it's actually about 33. Yeah, I think with the, if the opening is actually plus, then of course VIX might actually start to come down. And of course, if it comes down to below 25, then of course it will actually be a plus for the market. And the other thing which you guys have to actually notice is that the movements for S&P, right, compared to Nasdaq, basically the S&P movement has actually been quite, I would say, mild. Although yesterday I think S&P has actually dropped about how much? 120 points. Yesterday itself, it has actually dropped by, take this away, 120, I think. What is this here? Yeah, yesterday it has actually dropped by about 132 points. Yeah, 132 points. But of course, the days before, it is actually relatively. This was actually Friday, right? Yeah, it was actually relatively unchanged on Friday. Whereas if you look at the Nasdaq itself, right? I mean, on Friday, basically, they lost about 157 points, and of course, yesterday it dropped by another 500 points, about close to 4%. Yeah, and S&P is taking a smaller hit. So the tech side movements are actually much bigger. A lot of sell off, including big boys like Apple, Microsoft, has been sold off by quite a lot since Friday. Since Friday, yeah, Friday, and also yesterday, yesterday itself. Yeah. So far, guys, if you guys have any questions, just post so that actually I can answer them. Okay, let's look at some stocks, right? I mean, basically just to share a bit. Today we are just going to do some revisions. I mean, basically just to talk general on some of the pointers which we have already covered in the past traders talk. on looking at charts and also taking on positions. Yeah. Okay, this is actually Microsoft, right? Okay, and of course, if you look at Microsoft, it is actually currently trading at $264, and earlier, I think if you look at the earlier support levels, right? If you look at this line here, it's basically at around $270, and of course, yesterday itself, it broke below. And actually closed at where is this? This actually closed at $263. Of course, pre-market right now today is actually going to be is $267, right? $267. And of course, with any so-called rebound in the overall market, right? I mean, these stocks would hold up much faster as compared to any other tech stocks tech stocks like DocQ or TDoc and all. Those are all currently how to say going into the very low price low price below 50, right? I think some of these very in stocks has actually gone down by a lot, whereas the big companies like Microsoft, strong ones, are actually still holding up, going down by about only 25%. Okay, so as a trader, of course, we actually look for so-called short-term ups or short-term down to actually trade, and of course, if you are only doing intraday trades, of course that would actually be safer, but that will actually take much more of your time because you actually need to monitor the market, and probably lose sleep. Okay, so if you do not have the time to actually do that, of course I would advise to wait and sit out until things are much better, to come back to actually trade or swing trade. Yeah. If you don't have time, don't trade, and go and watch Netflix to support Netflix so that the share price can actually recover. Yeah. Otherwise, if you are trading, then unless you have the time to actually look at intraday trades, then it would be quite risky to actually hold trades overnight, during times when the market can be one day up, one day down. Yeah. Of course, if you are, how to say, if you still want to actually trade, then the better strategy is, of course, to actually start to have so-called neutral positions, as in, you are a bit indifferent if the market goes up or goes down, as long as it moves within a range, then you are actually fine. You're actually fine. And of course, that even those type of neutral trades, I mean, we also have to actually look at the charts, right? At which point should we actually deploy a neutral trade? For example, if you look at Microsoft here, right? If you look at Microsoft, I mean, I would say this is not a great time for us to actually deploy a neutral trade because it is actually trading at the lower range of the price. Okay, if you look at prices, right? Okay, there is actually you can actually see how to say a range where it actually trades. This was actually since January, right? There was actually a range where it actually trades here, right? So between this is what we call upper range. This is what we call a lower range. Yeah. And currently, Microsoft is actually at the lower range, mainly because the market has actually sold off by 17%. It's actually sitting down here, and of course, we would not know whether the market will actually continue to go down or whether the market will actually go up. Yeah. And of course, if you deploy a neutral trade during this time, right? This time, then of course the range where you can actually get a decent premium will probably sit between here and here, right? Sit between here and here. Okay. So of course, if it sits between here and here, if you look at the earlier so-called historical trade range for the past month, right? it is actually between these two lines. But if you do a neutral trade, you will be actually sitting between here and here. So what happens is, of course, if the market rallies back, up, then of course this range where you actually park your upper range, say if you're doing a neutral iron condor, right? Then of course this upper range would actually be the price which will actually be tested. Tested means that it will probably be breached if Microsoft actually rallies up. And of course, if the upper price is breached, then it is actually quite difficult for you to actually manage the trade. And of course, you can actually adjust the trade by moving the how to say, the lower strike up. If you actually want to adjust and you do not want to exit, and in hope that the premium collected can actually recover for some of the losses which is actually made on the tested side here. But of course, if they continue to breach above, then this will be in the money. Then of course, you would actually start to lose in the trade. And on the call side, it will be much more difficult to actually adjust because stocks in the longer term, it tends to go up, right? It tends to go up, and of course, if the market rallies, then it will probably never come back to below this upper strike level. Yeah. But of course, if you are talking about adjusting a lower strike, then it will be actually more possible because you can actually roll in time and hope if it comes down, right, and hope that Microsoft actually recovers when things are much better. Yeah. So like I said, this is also not the best time to actually deploy neutral trades. And of course, if say Microsoft is actually trading here, let's put it here. And of course, earlier, the better time to actually deploy a neutral trade would be probably somewhere here, right, where you actually deploy it. And of course, then of course that time probably you hit the lower range and upper range. And right now, it might breach the lower range. Then of course, if you still have time in your trade, you can actually hope that Microsoft closes above the lower range on expiry. And of course, if not, you roll over the trade to actually buy you more time. And of course, on the upper strike of the so-called iron condor, then of course that would probably reach a max profit on expiry. Yeah, because price came down, right? And you can actually renew another call if you want, or just close the call spread, the bear call spread, and manage separately on the bull call spread to extend time. Yeah. I mean, for me, I've not done a neutral position on this what is that, Microsoft, but I have actually placed one on Apple, yeah, which of course right now, because it is actually coming to the lower strike, right? Then that position is actually negative for the time being. But of course, when the now pre-market is up, right? So if Apple recovers from the lows, right, you can see that, I mean, it is actually still holding on to the earlier lows, right, at about 150. Yeah, 150. It is still trading above 150 at the moment, and it has not breached the previous lows. Yeah. Okay. All right. Apple, Microsoft. Okay, the other one which I actually wanted to talk to you guys is actually on Google, right? Okay, Google. As you guys know, Google is actually going to do a stock split, right? Stock split. Okay, And this stock split is actually going to be effected early next month. I think, if not mistaken, on the 6th of June, if not mistaken, 6th of June. And of course, if you guys do not know what is a stock split is basically splitting of the stocks from Google. I think it's a 1 to 20 stock split, if not mistaken. Yeah. So if you have one Google stock, right, it will actually split to 20 stocks, 20 stocks. And of course, when it splits to 20, then of course the price will also be divided by 20. And currently, Google is actually trading at its lows, about 2250, 2250, yeah, 2250. And of course, once it gets split, you would trade probably at 100 something, yeah. 2250, yeah. You will trade about 100 and say 112. Okay. So what does it mean for Google? Okay, a lot of people do not have I mean, Google, if you want to buy 100 shares, right, it will actually cost you a lot of money. Yeah, a lot of money. A lot of people don't have that kind of funds to actually buy into Google. 225,000, right? Yeah, correct. Yeah. So a lot of people do not have that kind of fund to actually buy 100 share, and of course they buy one lot, two lot, three lot, or four lot. Yeah, then that would probably already make up about 10,000 US dollar. If you hold four lots, right? Four lots, yeah, four unit. That's already 10,000. So of course, the stock split will not cause any fundamental change to the share. It's only a change to the so-called share price, and also the number of units available. And of course, when instead of owning one Google share, you start to actually own 20. Yeah, if you have one stock, you get 20. Okay, that and the price is only $100. So Google actually becomes more affordable. When it becomes more affordable, then of course the liquidity can also increase. And of course, when the liquidity increase, means more people actually trade it. Yeah, and of course, for people who have never had the ability to buy Google, right, they can actually start to buy Google at 100 plus dollars. And of course, that would likely cause more people to buy. I mean, it's how to say, it's like just an example would be like if you go to a restaurant, right? If you go to a restaurant, you actually buy say a char kway teow, a mee, right? You buy a mee, and that mee costs $8, 8 ringgit, 8 ringgit. Okay, so normally when I go to the hawker store or the restaurant, I eat a char kway teow, 8 ringgit. I would eat one plate, 8 ringgit. Okay, but when I say I go traveling, and when I go to Penang, right? Penang people are actually very smart one. Okay, so they say, why should I sell one mee at 8 ringgit? I should actually sell one plate at 450. Okay, 450, one plate 450. So when you go there, then of course what they do is they split the char kway teow from one plate, right? They split it to two lah, and then they sell you 451. 450, yeah. So of course 451, then overall, I mean, the value increased, right? The price increased, right? From what is that, 8 ringgit, it actually effectively goes to 9 ringgit for the same, but they just split it into two. And for you, if you eat one, not enough one, you have to actually buy two. Even if you don't eat the char kway teow, you'll probably go and buy another 450 in another food, like prawn mee or some other things. You actually eat more lah. So more, that means basically it's the same like a share split, right? The so-called thing is actually the same, but it's split into two. Then basically, when it's split into two, the value actually so-called can actually increase. Yeah. So this is a similar thing that can actually happen to Google, and in fact, it has happened to most the earlier shares which has actually been split, like Tesla, Apple, Nvidia also had a stock split. But of course, post stock split, the value has actually ran up. Before the retracement right now, like, I mean, basically currently all the stocks has actually came down, right? But at the point of stock split, basically this has actually happened, and of course, the sad thing is, of course, for those holders who have already earlier bought into Google, thinking that Google would have a pre-stock split rally, it did not happen because the market came down, the market came down, yeah. So of course, right now, for those people who have actually not got into stocks like Google, then of course this is an opportunity for you to actually evaluate whether this is actually a good time for you to actually put in positions on this stock. Yeah, of course, besides Google, then there is actually also on Amazon, which has also a stock split. I think Amazon would stock split is in July, if not mistaken. Yeah, yeah, you can check it out. Again, Amazon price has actually gone down to 2175, right? 2175. Yeah, post earnings, it had actually had a huge drop, and of course, with the continuation of the market retracement, right? Amazon has continued to actually drop right now, uh, about 42% discount from its high. Amazon 42% discount from its high, and basically you are going back to so-called pandemic prices. Okay, you're going back to so-called pre-pandemic prices, because if you look, Amazon was actually priced at this level in April 20, just after the so-called COVID crash, which actually happened in March. Yeah, in March. And of course, if it dropped down further all the way to 1,600, which I think probably not likely, unless the market S&P actually runs down all the way to below 20% retracement, then it is possible to get a 50% discount. Anyway, as an investor, we can actually it's very difficult for us to actually time the bottom. Very difficult to actually time the bottom, and of course, we can tranche in. We can actually tranche in to actually invest in tranches when the price are actually how to say good lah. I mean, if you look at Amazon, right? Here, basically, you're talking about coming to this so-called value, which was the this is the pre pandemic high, right? Pre-pandemic high is actually trading right at that level here. Yeah, at that level. Okay. And of course, if the market rallies back, then of course, highly likely Amazon can actually follow. Although the results are not good, I mean, basically, this is actually still one of the bigger companies in e-commerce, in cloud services and whatnot, right? Yeah. So this is still a good long-term value buy for your portfolio. Yeah. So Google and Amazon, watch out the stock split. Of course, when the market recovers, then of course the possibility of a run up for these stocks is actually much bigger as compared if you actually want to buy 90% discount companies, right? Yeah, you can also find 90% discount companies, which I do not know if you have the the how to say guts to actually buy 90% discount companies. There is actually a lot of 90% discount companies, and of course, if you look at this, this was actually last about 2 weeks ago. It was 90% discount. Yeah, this is Peloton, right? About 2 weeks ago, it was 90% discount. Until yesterday itself, it is actually at 91% discount, another 2% discount from previous high. I mean, this company Peloton actually traded at $170, $170. And of course, today you see it is only worth um, pre-market is $10. So yesterday it closed at $14, and today it dropped by another 40%. No, about another 30 over percent, 30 over percent because of earnings. Yeah. Okay, because of earnings, it dropped another 30 over percent. Okay, so again, if you look at how the market punishes all these companies, right? When times are good and when everybody wants to buy a Peloton exercise bike, when they are locked at home, right? This price shot up to 170. Everybody chase this, yeah. And of course, once the pandemic is gone, then and also because of the interest rate hike and of interest rate high, the stock get punished, right? Punished and actually drop all the way from 170 to $10. $10. Imagine if you you bought this company, whether it is actually stocks or options, when it was actually trading at the high here, yeah, then of course this would be actually quite painful, yeah, quite painful. And of course, other stocks recently, which has also got beaten down, is the China stocks, right? Okay, okay, China stocks is another story, right? I mean, today is just a bit light, like, I mean, a bit light just to talk a bit more about market and stocks behavior and all. Okay, if you look at China stocks, right, I think a lot of things are I mean, you say rotation, right? Rotation. I think the media also uses news rotation, news rotation. Okay. Earlier, I think somewhere, I think was it in March? Was it in March? No. Yeah, I think it was in February, right? February, somewhere around February. Some month, 1 or 2 months back, lah. There were talks where US actually wanted to delist all the China stocks because they don't want to open up their books and all these kind of things, right? Then of course, at that time there is a huge sell-off in the China stocks, including companies like Baba and all these kind of things. Yeah. So the stock price has actually came down, right? Came down. And then I think about last week? Last week itself, again the same thing came out. No. After that, the China government came and say, okay, we will cooperate with SEC, we will open up books and all these kind of things. Then the stock price went up. The stock price went up. Okay. Then again, now I think last week itself, again there's some stories again which I saw again talking about the same thing. They want to delist all the China companies and whatnot. Then again, the stock price of this China company came down, yeah, came down. But just before that, the China government said that they will actually loosen up or finish up all the clamp down on the tech stocks after their Labor Day, right? Labor Day holidays. They will actually start to ease all these things, and the price actually rallied. Yeah. Then now the news that want to delay all this came, and the price actually came down. So if you look at companies like Baba, I think when the news of easement of clamp down came, Baba shot up about $10, $10 up, and right now Baba came back down to where it was previously. Yeah, is it? Yeah. So volatility is one thing, and of course, how to say, if you actually trade on these things and thinking that it will continue its rally, it would actually be quite difficult until you get a so-called very clear sign that the so-called downtrend is actually reversing, whether it is actually crossing of the 50 MA against 250 EMA against MA against the 100 moving average, right? Those can be one of the clear signs for a retreat, for how to say, for a recovery lah, of the stock lah. But until then, if you trade on so-called short rallies like this, most of the time in the past, it has been sold down. You see, go up back to 50 MA, sold down, go up to 50 MA, sold down, go up to 50, sold down, go up to 50, sold down. Yeah. So this how to say, is what is currently happening to stocks like this. Of course, if you want to trade it, you can also trade it on the how to say, when it actually reaches this, you actually do a counter trade to see for it to actually come down. Yeah, come down. Yeah, so these are mainly short-term trading strategies based on how the stock behave in the past, based on the stock charts. Yeah. Okay. Yeah, I mean, just let's be today. I mean, just to recap on some of the things which we have actually covered in the past traders talk, and that's it, because nothing much we can actually do during these how to say, volatile times in trading. Like I say, unless you really want to trade short term, you can actually do that. Otherwise, if you are wanting to go long, is a very difficult process if you actually want to go long at this time. Of course, if you actually want to short, then you can of course go short. Even that, like I said, the market can also reverse very very fast if it actually wants to do a reversal. Yeah, so it works both ways, long and short. Yeah. Okay, so I hope you guys, I mean, have actually got some insights on the market, and basically how we should actually take care during this volatile time. Trade less is fine, because when the market comes back, when it's actually more stable, and when it's actually more safer to trade, you can actually come back, because the market is always there. It won't go away. But of course, if you lose money, if you lose money, then of course it will actually be gone, and it will be quite difficult for you, or you will actually need to actually earn more in order to actually get back what you have actually lost if you trade in volatile times. Of course, if you are actually investing, then it would actually be a different, totally different story again. Like during times when the market is actually bad, right? Then of course, as an investor, that is actually the best time for you to actually invest. I mean, just like Warren Buffett, right? He has also, I mean, in the recent months, also invested or put in stake at more companies, Chevron, or what is that? HP. Yeah, HP. What else he bought? What else he bought? Yeah. So I mean, during time Activision, I mean, he has also bought Activision, right? So during times when the market is down, and valuations are actually low, right? That is actually the time where you as an investor would actually go in. So it's actually a total different perspective. And if you, I mean, most, how to say, most people can actually wear two sets of hat, right? If you are busy trading, then of course you invest less, yeah. But if you have nothing to trade, right? If you have nothing to trade, then of course there's actually time for you to actually look at value investing, and instead of deploying capital into trading, that's the time where you actually deploy your capital to actually hunt for value stocks. Yeah. Okay, so that's all for this week, and hope we actually get a green day today. Let's see if the market is still up. The market is still up. In fact, it's actually up higher. Nasdaq has actually gone back to 190 points from earlier, plus 130. Yeah, and S&P has added another 15 points up from earlier up 25. Yeah. So hope we actually get a green day. Of course, if we get a green day, like I said, take quick profits, and all the best for the week. Yeah. So I'll catch up with you another time. And if you have any questions, do post on our Facebook page or even send us an email, and we'll be glad to actually answer any of them. Yeah. All right. Thank you. Bye bye.